Joining us now to talk about the outlook for 2026, also the future impact potentially of Netflix deal to acquire Warner Brothers. Alicia Reese joins us. She's Wedbush senior analyst. Nice to have you, Alicia. I guess first off, the box office. There aren't that many public plays. I guess AMC, obviously, we have Rich Gelfond on from Imax all the time. That had a good year. How are you thinking about how this year will shape up?
Yeah, I think we have a lot of good movies coming, so there's one thing. But, investors are a little bit wary right now, given the Netflix deal overhang. If Paramount wins the bid, there could potentially be reduced volume of content coming out. If Netflix wins the bid, there could be, down the road anyway, shortened theatrical windows. So investors are a little bit wary heading into 2026. And I think, that's reasonably so, especially after a few misses in the holiday quarter, including, Avatar and Wicked, both being down about 20%, give or take, on their predecessor films. But there are still some highlights to, be excited about. And I think IMAX, again, as you mentioned, is going to be well positioned into 2026.
What makes a box office hit? I think right now the key is that you have to have a kids movie, a good kids movie that adults can enjoy as well. Because the one thing better than kids being on their iPads is taking them to see the movies. It's a good experience.
Yeah, we've seen over the last few years some really great large family films, and that's why you're seeing a lot more family films coming out in 2026, because studios are certainly realizing that that's a very important component. Disney had its best years since the pandemic, and we're seeing that family film franchise and originals come back to life, but a lot of other films as well. Originals are required, but not doing quite as well. A lot of the franchise films coming in 2026, though, will appeal to kids, all ages, really, in adults throughout.
You mentioned, of course, Netflix and Warner Brothers. Certainly going to be something we focus on as this year moves along as well. Continued competition potentially there from Paramount for that asset. I noticed Netflix shares, beginning of the year here, down rather sharply. The stock is trading below the bottom of the collar that we talk about, so that has impacted the overall value of the deal. It's worth probably around $27.50 instead of the $27.75. How are you thinking about the transaction right now?
I'm thinking that, the shareholders certainly have a huge decision to make in the next few weeks, whether they go with Paramount. It's certainly a sure deal, but there will be some regulatory pushback, and it could take just as long as the Netflix deal is expected to, given the regulatory pushback on that side. Obviously it's going to be different regulatory pushback for the Paramount side. It's more CFIUS, whereas, on the Netflix side, it would be more domestic, and Netflix is not necessarily in a competitive concern on the customer side.
I guess that's more my question, Alicia. I mean, in terms of, you follow Netflix, I don't think there's CFIUS on Paramount, but you follow Netflix. Did it concern you that they want to do this deal, that they are doing it, and what does it say to you about how they view their future?
No, I don't think it's concerning. I think they're seeing there's some value in theatrical. They can do a lot more with the Warner Brothers studio in terms of theatrical and on their on their streaming site. I think there's a lot that can be gained from Warner Brothers content on both sides, and Netflix has the money to really let that studio flourish in a way that other studios cannot right now.